You've probably heard that billionaires just don't pay taxes, but nobody really explains why. So I looked into it. But the answer isn't actually about billionaires at all. It's about how the entire system was built and who it was actually built for. And I think you might be a little surprised where it all started, because I definitely was. To understand where we are now, you have to go back to when it all started. For most of American history, there was no federal income tax, like none. The government funded itself almost entirely through tariffs, which are taxes on imported goods. If you earned a wage, you kept all of it. The idea that the government would take a portion of your hard-earned money just didn't exist. But that all changed in 1913. The income tax that got introduced wasn't anything like it is today. It only applied to incomes that were over $3,000, which in today's terms would be about $90,000. So if you were making under $90,000 today, you wouldn't have to pay income tax. And that actually protected about 97% of Americans from paying taxes. But then World War II happened. The government needed money, and it needed money fast. It needed it on a scale that it had never needed before. And almost overnight, the income tax went from only really touching the wealthiest of the wealthiest to just about everyone. That really created a practical problem because most Americans had never actually paid income tax in their life. They didn't know how to file. They didn't have savings set aside. And a lot of them just simply could not afford to receive their full paycheck and then give up a portion of it, especially giving up that portion of it months later when it's now a larger sum than it would be paycheck to paycheck. So the government introduced something called withholding, which you're probably familiar with today. Your employer takes out the money before your paycheck ever hits you. A tax that you never touch is a lot easier to accept than one you have to actively give up to the government at the end of the year. That system hasn't left. The paycheck you receive today probably works exactly the same way that it did in 1943. But while all of that was happening, a completely separate set of rules was being written for a completely different kind of money entirely. The US tax code isn't just one system. It's actually made up of two. One for the people who earn money by working, and then one for people who make money by owning things. And they work completely differently. Here's the thing that most people miss. The capital gains rate being lower than the income rate. That gap matters, but it's not really the point of this video, and it's not the point of why billionaires don't pay taxes. The point is that most billionaire wealth isn't even from capital gains, but they were just never going to get taxed in the first place. Because billionaires don't really make income. All of their money comes from assets, things like stock or owning real estate. Stock sitting in an account going up in value isn't money that you've earned. It's just a number on a screen getting bigger. And the tax code doesn't care about numbers on a screen. The tax code only cares about money that moves. Your salary, it moves. The moment it lands in your account, it's already been counted, taxed, and recorded. A billionaire's stock can sit and keep growing for 40 years. And the IRS doesn't even bat an eye. They don't get involved because it's not being moved. Nothing was sold. No income was made. That's the actual gap, not the tax rate. It's the fact that one kind of wealth is almost impossible to tax under the current system, and the other kind is taxed automatically before you even see it. When your stock goes up, that's not a taxable event. The IRS doesn't care if your net worth grew by $10 million this year if you didn't sell anything. The gain is still unrealized. It exists on paper, but it hasn't been liquefied or converted into an income yet. And since the tax code only taxes income, not wealth, that gain just sits there, growing, untouched. Most Americans don't have the option to just convert their income. You work, you get paid, you get taxed. That's the deal. But if most of your wealth is in stock, which is true of almost every billionaire in the country, you can watch your net worth grow and compound for decades. And it doesn't ever trigger a tax bill. It's because you're not earning income. You're accumulating wealth. And those two things are taxed completely differently. So how does a billionaire actually access cash without selling and triggering a tax bill? They borrow. Say that your stock is worth $10 billion. You go to a bank and you put that stock up as collateral. The bank lends you $500 million. From the bank's perspective, this is actually an incredibly safe bet. If you don't pay them back, they'll just take your stock. From your perspective, you just got $500 million in the bank, and a tax bill was never triggered. That's because a loan is also not income. The IRS doesn't care. Your stock keeps growing, and now you have $500 million cash. So a few years later, you need some more cash. You take out another loan. You use it to pay off the old one if needed, and the cycle continues to repeat. You never sell, you never realize the gain, and the stock just keeps sitting there, appreciating, untaxed. You do this your entire life, and then you die. When that happens, loans get settled against the estate, but the stock that covers them gets passed to your heirs with the cost basis reset to whatever it's worth today. 40 years of gains are completely wiped from the tax record. That means all of these taxes that you would have had to pay if you were to take out your stock goes to zero. So I think that this is a little confusing, so I'm going to simplify it a little bit. If you put $1 billion into the stock market and over time that grows to $10 billion, if you were to cash out that $10 billion at the end of the 40 years, you would have to pay taxes on $9 billion because that's what you earned. That is what grew, and you only pay taxes on what you gained. But say that that $10 billion stays in your account and then you die. You give that $10 billion to your kids. The kids didn't get it until the $10 billion was there. They never had that $1 billion. So for them, all of the capital gains of that $9 billion is completely wiped. They are now starting from zero, and they only have to pay taxes on anything above that $10 billion that grows. And then they start the whole thing over. Buy stock, borrow against it, live on loans, die, and repeat. If you want me to do a deeper dive on how the inherited side of this works, just let me know in the comments below. So now I'm going to talk about a few other things just really quickly why billionaires don't pay taxes. The first thing is carried interest. Hedge fund and private equity managers get paid through a share of profits rather than a salary. Even though it's functionally their income, it actually gets taxed at capital gains rate, which is around 20% instead of 37%. It's survived repeated attempts to close it. There's also 1031 exchanges, is where real estate investors can actually sell a property and then roll those proceeds directly into a new property without even paying the capital gains tax. There is so much money in real estate, you wouldn't believe it. If you do it repeatedly and then you defer the bill indefinitely, you're just never going to pay taxes on it. Then there's charitable giving. All of those foundations under these billionaires' names, they could be really nice and have a big heart, or it could be from a tax reason, or both. Donate appreciated stock directly to charity and you completely skip on the capital gains tax entirely while also taking a full deduction on the current value. You set up your own private foundation and you retain significant control over where the money in this charity or foundation actually goes. In 2021, ProPublica obtained a massive leak of IRS data. What they found was that 25 of the richest Americans paid on average a true tax rate of about 3.4% on their wealth growth between 2014 and 2018. The average worker, in comparison, pays about 22%. Both numbers come from the exact same tax code written by the exact same government. The result is two systems running side by side, one for people whose money comes from working and one for people whose money comes from just owning things. They were built at different times for different reasons, and they never really reconciled with that. There's been a lot in the press about billionaires not paying taxes and why that is, why it should change, but it's actually such a systematic thing that we would have to rewrite tax codes entirely. And whether that should change is currently up for debate. It has been a contested question as of late, but the system didn't just fall from the sky. It was built, and that's probably the only honest place to actually start.